ICT or SMC. Hello everyone, I hope you are safe, I hope you are doing well, I hope you are catching R as usual. I'm here with the brand new video to make the difference between ICT and SMC and which one is way better and which one you should go for it. So these are the main topic of this video. I'll go through all of these topics here. I'll try to make the difference between what ICT does and what SMC does and which one you should go for it. Actually for me, I trade both SMC and ICT. I put both of them together to bring out the scalping mastery. But actually I don't use like typical SMC and typical ICT. I just took some of the things from ICT combined with some of the things from SMC to be able to, like the way I scalp. So first thing, I'll try to go through the market structure. Here are the topic and I'm going to break it down on this chart here. So then first thing is about the market structure. What is different from the market structure of ICT, or what ICT uses for the market structure and what SMC uses for the market structure, or those SMC traders and ICT itself? For the market structure, if you look at SMC perspective, that's what we get. We have this, we have this, we have this, we have this, we have this. Okay, so this is the market structure for the SMC. And if you ask the SMC trader to maybe explain you this uh this price action that is buying, like explain why is it bullish, he will tell you that there is this low that came, tap order block, here gave a buy, created a new high, so now drop, give a pullback, tap another block, created a new high, then pullback, created a new high. So for them, they see order block mitigation, new highs being created. So if you ask maybe SMC trader, this is the basic explanation the person is going to give it to you. So this is what SMC uses. But for ICT, what they use it, I know that price has to tap some sort of demand zone to give a buy set to the upside, right? But for ICT, for them to validate this low as a valid low, they will need this low to fill some sort of gap. Like they want to see price drop, fill a gap here, then give a buy setup to the upside. The same thing when price drop, it has to fill some sort of gap. Sometimes they do use order blow as well. There's really no problem about it, but most of the time they use FVGs, like those imbalance. So price come fill a gap and buy, create a new high, come fill a gap, create a new high. So every time price buy, when it takes out this high, they call this high a buy side liquidity. So because when price can break this high and give a pullback here, people are going to buy from this break and retest. So they call this as buy side liquidity. Price will come, take this buy side liquidity and give them a sell setup. And when price sell down, it has to take some sort of sell side liquidity before giving any sort of buy setup to the upside. So when price drop, they don't just see FAG and try to take a trade based on, but they want to see some sort of low here, that price come trade below, take out the low and give them a buy setup. So when this low being taken, they call this as sell side liquidity being taken, and maybe they have a gap here, price fill, then they give them their confirmation and they take the buy set to the upside. But meanwhile for SMC, they more rely on order block. Okay, they don't really take trade based on imbalance. They use imbalance as confluence. Let's say if you have an order block and you have imbalance below, or let's say imbalance here and order block below, then they see this imbalance as confluence for price to come and tap the order block and give them a buy setup. So this is the only thing they use. But meanwhile, ICT, they use those order block, those FVG pretty much all the time. And when it gives them the new high, so they see this low as a strong low that took liquidity or did something and break structure to the upside. But then SMC again, when price doesn't tap the order block, then most of the time they see this low as inducement. When price does not tap the OB, they see the low as inducement. It's really not wrong to see a low that did not mitigate another block and give you a new high. It's not really wrong to see it as inducement or liquidity or anything like that. It's not really wrong, but we have a lot of scenarios with a lot of things to really see if price fill the gap, or if price maybe took liquidity, if price created a new high. We have a lot of things to look at. You don't just take a low that did not tap your order block saying that is an inducement to your order block. It is okay, but there's a lot of things going on there that you have to understand. So that's exactly what SMC traders, they don't know about. They just see a low that did not mitigate their zone and they think that's inducement. So if I come here and show you what I mean by, let's say they have this low, okay, or which low can I get? Okay, so let me get this low here. So they get this low, this zone as a value order block, and price never come. He came here, he gave new high, he keep giving new highs. So what they see is all of this for them is inducement, and they not even look to maybe get any sort of buy setup here. There is a reason for price to mitigate maybe a low here and give a buy setup to the upside. And if you know the reason, you can still take the trade. It's not because price didn't tap your zone that you are now waiting for is still. But most of the time when price does leave those kind of zone, when it comes back, this zone becomes liquidity. So for SMC traders, they don't take into consideration whatever the low that did not tap the order block did. Like whatever has happened here, they don't know. Whatever has happened here, they don't know. All of the things they see is all of these are liquidity. But you have to study all of this. Study all of this to know if they are really liquidity or not. So this is the main key. Then, so this from the market structure. I'll try to show you on the chart right now. All right, so I think I'm even going to take something like forex.com. So on this one, I'll try to explain market structure based on ICT and based on SMC. So on this, the SMC setup that might look like is this one. They have, let's say this has an order block. This one is order block for SMC traders. As they have this order block, price from this low price board broke the previous high, then it's coming back, give them tap this one and give them a buy setup to the upside. So this is what the SMC trader sees like, and all of these things inside for them is maybe liquidity or something. But the fact that price give them liquidity in sort of maybe equal lows like this one, you see equal lows or whatever, for SMC traders most of the time liquidity inside of the zone the way here, or if there is gap or something, it's just a confidence to their trade. When they have that, the thing is really a high probability setup. Meanwhile, like it's not really compulsory for them to see liquidity being induced before price takeout. Then if I come here, this one I'll try to break it down in ICT way. On this, what do I see? ICT trader will see this as a gap for price to come and fill it. So they see this as a gap, and they see this low here. Do you see this low here? This lows. They see this low as liquidity, sell side liquidity. So this is the sell side liquidity for price, and this is a gap, and they might have another block here. Price never tap the OB, but anyway, they might have another block. Other block they don't usually use, but what they usually use is the gap and the sell side liquidity. As price has to come fill this gap and take out the liquidity before give the buy setup, that's pretty much what they want. Price left behind sell side liquidity and imbalance or FVG. Price come fill, give them a buy setup, they buy. They want to see all of these things. If they don't see sell side liquidity, a real ICT trader will not really take the trade. If they don't see a gap, a real ICT trader will not really take the trade. Meanwhile, SMC, if they don't see any of these things here, as far as they see order block, for them is a valid. And if they see maybe a break constructed to the upside, then that's the holy grail for them. They want to take a trade based on. Meanwhile, you have to get all your confidence in place or put everything together before getting your trade setup. So this is one of the things with market structure for SMC and ICT. Then if I come back here, the second thing we have FVGs, and which I already explained it right now. As ICT, they use most of the time FVG to maybe look for confirmation and to trade. SMC traders, they use the imbalance maybe for a confidence to their trade. Meanwhile, ICT, they use the FVG as the main topic for them. And not only that, even for confirmation entry, they use FVG to enter. Let's say price give them a chain of character and a pullback, something like this. Price drop, then buy, break a high, they get a chain of character and a pullback for a buy setup, right? So when price does this, and if it leaves behind some sort of FVG, then they try to enter based on. They don't just look at the order block, they enter from where they think the FVG is at. They get the FVG somewhere here, and they get the stop loss somewhere here. So they can also use it for confirmation entry. Meanwhile, SMC traders, most of the time, they only use what I call by order block. So now the third thing is the breaker. What is a breaker? A breaker is just like me, I just call it break and retest. We have price dropping, okay, price dropping, then it gives a pullback and it drops. And this pullback, it doesn't come to the supply zone, to the previous supply zone that broke structure to the downside. But what price will do is there is actually demand zone here that price broke through, then came back. And when price come back, most of the time it comes to mitigate the breaker block here. So this would be a breaker block. Why? Is a demand zone that now has flipped to a supply zone. So price can now pull back, mitigate this order, and sell to the downside. And who uses breaker block a lot? People who are using breaker block are just ICT traders, because I've not really seen any sort of SMC trader that is maybe entering from a breaker block. Like I haven't really seen much. So is ICT they use breaker block to enter trade, or maybe here they can look for confirmation, they enter, or they can also use it as confirmation entry. If price come to the breaker block here, price buy, break the previous low, give them a pullback and sell. And let me make it well, we can have a pullback that way, and they can have a breaker block here. The last demand on the price broke and dropped down. So by doing this pullback sell, they use this demand as the next supply zone. And what they do is they can just get the entry here, get entry here, and a stop loss above this high, which makes it to be a huge stop loss, which is also something that SMC traders, they don't really use it much. So breakers are used by ICT most of the time. So this is one of the difference as well. From market structure to averages, we have now breaker block. And now let me show you on the chart. They don't really happen all the time. Like, it's not really easy to see them, but let me see. All right. So I think I got one here. I'll try to replay price. If I look at this, I go to the 30-minute time frame. If you look well, you see this order block here, or you can look at this, any of these two here. This one is not really clean, but this is pretty much the only thing I can see right now. So we have this one would have been a surprise, and the price buy came, tap, and give a sell to the downside. So this supply zone now can become a demand zone. This one, price will now give a pullback. You see price pullback inside of this, then give a buy setup to the upside. So this is what they call by breaker. So this would have been a supply, price broke, pullback, tap, this one gave a buy. And most of the time it looks like the support a resistance thing, like some retail thing. Like if you see this as a zone that price rejected, then broke through, came retested, then give a buy setup to the upside. So this is what ICT also uses a lot. They use for confirmation, they use for higher time frame, they use pretty much for everything. So if I look at this, I think the same thing has happened here. You see price breaking the previous high. From this low he bought, they broke this previous high here. By breaking this previous high, price can give us a pullback for a buy setup to the upside, right? And this pullback came to mitigate this supply zone here. Supply zone now has now become a demand zone. So now price can pull back to mitigate this and buy. For some reason price did not tap, and by not tapping this zone is still okay for them, because they can use this and they can also get a gap there. So this would have been the gap they can have. So this was a gap, price came, fill the gap, and somehow failed to maybe tap the breaker block, but I still find that that would have been a nice buy setup for them. So for the next topic, breaker, you have buyers. For SMC traders, in terms of buyers, when they see this price action, we are bullish, right? They have, let's say this, you have buy, pullback, this, okay? We can say that SMC traders, they also have a bias, but most of the time ICT traders, the bias is really crazy, because they can know if the day is going to be bullish or bearish. If I try to replay price somewhere here, let's see, even one behind, okay, let's see, I replay price somewhere here. For SMC traders, they will just follow market structure on the lower time frame, but for ICT, they can do the analysis on the higher time frame and know if this daily candle, the next daily candle, is going to be a bullish or a bearish. And even the weekly candle, they may know if it's going to be a bullish or going to be bearish. And they have some time and price things behind it. I'm not really gonna explain here, but if I do this they came bullish, but then if they go to the right time frame, they are going to know if price is going to give them a bullish day or a bearish day. They just know based on just analysis. They don't wait for price to give them the bullish maybe the bullish candle or something, but they just know by just analyzing the higher time frame. It's kind of interesting. So if I come here, this is the bias entry, and entry, I think I pretty much explained it right now. For entry, what they have is they have this, they have this, they have this, change the character, pull back, buy. For SMC traders, for sure, they always enter from order block. If there's an order block, they wait for order block price. Sometimes it doesn't tap the OB, sometimes it does tap, so that's it. Then for ICT, most of the time they have a lot of things they use. They can use gap, okay? If there's a gap here, they can use. They can also use order block. Sometimes they do that. Then they can also use the breaker. I told you guys, if there's a breaker here, sometimes price can break and pull back to this breaker and give a buy setup to the upside. So when ICT or SMC traders, they miss the trade from the order block here, they're waiting for price, never came. For ICT, they got the buy, because the buy is somewhere here. They can put stop loss below this low, or they put stop loss below maybe the gap or something. But there's something about the stop loss that I never understood for ICT, but they still, So this is the kind of the entry they can have and wherever the TP can be. So this is the type of entry. But SMC traders most of the time is just order block the entry and order block the entry. And time and price. Time and price is something most of the time is ICT. For SMC traders, they trade at any time of the day. If price tap the OB at maybe Asia session, they still gonna get the trade at Asia session. If it tap maybe at London or New York or whatever, no matter what time frame it tap or whatever what time of the day price tap the OB or tap the zone, they just look for confirmation they enter. But we also have some disciplined SMC traders where they don't trade Asia, like they wait for price to be at London or New York or any other thing than Asia session. Then they can now look for the trade setup they can have. But meanwhile, ICT, they trade a specific time of the day. It's especially if is a scalper. I see most of them are scalpers, but I don't know if we also have swing traders anyway. But if I look well, for ICT, they use time and price, meaning that a particular time, that's where they want to see price at particular level. If they want to buy from, let's say, a zone here, they want to see price at the zone at a particular time. Most of the time, they use what they call by kill zone, and that's exactly what I have here. You see, from this 2 a.m. to 5 a.m. New York time, this is the London kill zone, and from 7 to 10 or 11, this is the New York kill zone. Yes, and we also have from 1 to 4 or 5. I don't know. That would be the PM session. So they have all those sessions, and inside the sessions, they also have a particular time that they want to see price hitting the zone or do something. If you look at this, kill zone, okay, London kill zone, inside of this they can easily break it down in some sort of time, and yeah, at that particular time, that's where they get the trade setup, and that's how they actually trade based on time and price. Now if you look at this, you have this gap, you see this gap here, price came, filled the gap and gave a buy setup, and this again back to the entry. If you are a SMC trader, price never tap your OB, so this would have been a gap. Meanwhile, this is another block, but the mitigation of this gap here is based on time. It doesn't just happen randomly. It can still happen maybe at Asia or something, but the fact that price mitigated this particular thing is based on a particular time, and is that time they use to hunt for the trade setup. Like when the time comes, they look for some sort of liquidity grab, then market structure shift and buy setup. And if I look at this, the fact that price did this, if I look, did price take any sort of liquidity? That would have been something inside of this. Price would have taken anything inside of this. Or you can just see this as relative equals or something, but price would grab liquidity and give them the trade setup before they get the setup they are looking at. If I come to the next trade day, like this one would have been even way clear. So this one, price drop, this took this liquidity and buy. This would have been the sell side liquidity they are looking for. Then they hunt for the trade setup inside of the kill zone, then they get the setup. And this kind of setup happens within a particular time. Like this one, it happened within the kill zone. So if a setup happened outside of the kill zone or outside of maybe a time they are looking at, they don't take the trade setup. They don't take the trade setup. Then if I come back, this time and price OB I've already talked about. Both of them they use, but SMC is a mass and ICT is not really a mass. And Wyckoff is something that SMC traders are using. ICT doesn't really use that. I don't even trade Wyckoff. I used to trade Wyckoff before, but it's kind of useless to me. You see price buy, do this, drop, buy, do this. It's sort of manipulations, okay? Price manipulates some highs, then drop, break structure, and pull back and give a sell setup. So when they have something like this happen, they call this Wyckoff maybe distribution. Then they try to identify every single level. They call this something, they call this something, what, UT, then break a structure, pull back, last point of supply or demand, and sell setup. So this is what the SMC traders they use, but ICT doesn't really use anything called Wyckoff. I know it uses accumulation distribution. Like you can have accumulation, you can have maybe manipulation, you can have distribution, you can have this, yeah, you can have this accumulation like price ranging here, manipulation to the downside or to the upside, and distribution to the opposite direction. And this you can maybe call it Wyckoff, but Wyckoff the kind of complicate things again. And this is what ICT basically use. It doesn't use the Wyckoff, but use the accumulation distribution schematic, those kind of thing, but it doesn't really use the Wyckoff. Like it never use the Wyckoff. And liquidity, both of them use, but for ICT is still a must. For ICT is still a must. I mean, if they want to take a trade setup, they want to see a high being manipulated, then price give them a sell setup, and that's where they sell to the downside. If there is a high manipulated, or if there is a low manipulated, they take a trade. Like for, yeah, let's say for the opposite action, the same thing here. Price manipulated this low, then give them a trade setup, then they take the trade setup. They can take it, and maybe they can target this one. So they enter based on liquidity, and they also target liquidity. They enter sell here, why price took liquidity drop. They enter buy here, why price took liquidity buy. And what are they targeting? From selling here, they target this liquidity. From buying here, they target this liquidity. So they'll always enter based on liquidity and target liquidity. Meanwhile, SMC traders, they don't really care much about liquidity. They use liquidity as confidence. Like when you have market structure bullish, all they want to see is market structure bullish. Then price come tap the order block. The only thing you look order block, then buy setup. And it's still the target. They can target some sort of liquidity if there is a high or maybe equal highs or something. They can target liquidity, but they use liquidity in like a confidence to the trade setup. If there's no liquidity, and let's say if there is no liquidity, nothing inside here, nothing below here, and there's a clean order block, and this order block maybe mitigated the previous order block, that's all they want to see. They want to see price come tap the order block and give them a buy setup. But for price, like the way I trade, if there's really nothing inside of this, nothing, like there's no liquidity at all, I want to see price taking this low before giving me any sort of setup. Despite this another block, he broke structure, did up everything, but if this low did not do anything for me, I don't take it trade based on. So yeah, so this the difference between how ICT and SMC use liquidity to enter trade. Then the next topic is going to be win rate and RR, and this is pretty interesting because for ICT traders, a real ICT trader, most of the time they have a good win rate compared to SMC traders. SMC trader can have, I don't know, most of them they can have 20 to 25 win rate. They don't usually tell you your the win rate. Okay, when you ask them what is your win rate, they'll be like, I count on RR. You know, I can have 10 losses on a row, but if I hit a 50 R trade, then I'm back in profit. So that's basically what they can tell you. Ask any sort of SMC trader, he will never tell you his win rate. Like he will never tell you his win rate. But real ICT traders, they don't really care much. The real ICT traders, they don't really care much telling you the win rate. If you ask them what's your win rate, they can tell you maybe it's 40, maybe it's 70. It depends. Some of them may have 70, may have 80% win rate. They can have it. Some of the ICT traders, I don't know, ICT himself can have up to 80% win rate. He might have it, or 90% he might have it. There's no problem. But then, based on this, for me, I know that SMC traders, the win rate is less compared to ICT traders. This is one thing that to take into consideration. Then, if you come into RR, then SMC, they have more RR than ICT. The ICT trader, most of the time, the good rate of RR they have is 5R. Okay, 5R for ICT trader is easy for him to hit. 5R and 3R, these are the two things. 5R and 3R. And then for SMC traders, they look for those maybe 10R to 25. Let me make it 10R to maybe 25, or 250, 200R. They can have, okay, they can have 100R. Even actually, I myself, I hit 100R. So they can have up to 100R. Meanwhile, ICT traders, they can have those 3R, 5R. They can also have maybe 20R is possible. ICT traders, they can also have 20R or 50R. They can still have it, but it's something that doesn't really happen much compared to SMC traders. So this is the thing. A low win rate, a high RR, a high win rate, a low RR. Because the fact that these people, they have a high win rate, because they use every single detail in their setup. They want to see liquidity taken, they want to see break of structure, they want to see AVG left, they want to see price coming to it, give them the confirmation, and all of this has to happen in a particular time. They can have the best setup ever, but if it doesn't happen in a particular time window, they don't take the trade. That's why the window is higher, because they just want to see those high probability setup. Meanwhile, SMC traders, they may even see double bottom below the order block they're looking at, but still they're going to look for confirmation and buy. And price might still give them confirmation, take them out, and before going to TP. So all of this happen. So we have a high RR people with a low with a low win rate, and we have a high R with the low RR, high win rate with low RR. So which one are you going for? This is the thing. Which one are you going for? If you are going for ICT, it's fine, there's no problem. If you are going for SMC, it's fine, there's no problem. For me, why do I use both? Why do I use both? I used to trade SMC. That was like, I don't know, 9 months ago or 10 months ago. I used to trade SMC, raw SMC. I have a zone. I set my alert. I went for price to come, give my confirmation. Even if I know price, give me, if price has double bottom below, I don't even know what this low did. Confirmation, I buy. Even if this thing happen at Asia session, I don't care. I just take my buy setup. If it happen at whatever time window, I just take my trade setup. And by doing this, I know my win rate is low and I might still hit those high RR trade. But overall, if you really hold your trade full 100R or 25R or 50R or whatever, with a low win rate, you can still maybe make money. Yeah, you can still make money, but it's kind of difficult to make money, especially if you start going through some streak of losses. Let's say have if you trade SMC, it's really easy to have 10 losses on a row. You can have 20 losses on a row. I see some SMC traders, they can have 20 losses on a row. No 20 RR. Yeah, let's say minus 20 R, right? Yeah, minus 20 R. They can have 20 losses on a row, 15 losses. All of those losses, they can have them on a row. And they all rely on one setup that will take them out of maybe a drawdown or something. But then, yes, it's possible. Okay, it's possible. There's really nothing wrong about it. But let's say that you are trading a funded account where you have maybe a max drawdown of 5% a day, but most of the time those people, they don't really hit 5% a day, but let's say 12%, overall 12%, and 12% you only need maybe 24 losses on a row. And SMC traders, 24 losses on a row, they can have it easily in a month. They can have 24 losses on a row before maybe hitting a nice setup that did play out. Or sometimes they can even have 10 losses on a row. Meanwhile, they over risk. Sometimes they go 25%. They go maybe 1% risk. Sometimes 0.75 or something. Sometimes they over leverage. That's what I want to say about. So the discipline is still there, but sometimes when they over leverage, all of these things happen, then it's really easy for them to somehow blow the account or not really end up not making money. End up not making money. Meanwhile, if you look at ICT now, if you look at ICT, they have a high win rate, meaning that maybe if they have 5 trades set up, they can have maybe 2 of them that will play out. They may have 2 of them that didn't play out. So overall, they have maybe a good win rate. That's fine. But then if you come to RR, the RR is very low. Then if the RR is very low, they have to really consider the RR they're having to be able to make money. So what I mean by is, if you hit your ICT trader, you hit 3R, and if you take maybe partial 1R, even if your win rate is 60%, it's going to be a bit hard for you to make money because you don't really make that percentage gain. If you kept your 3R full, that would have been good based on your win rate. But if you take partial at some funny R, there's going to be really, it's going to be crazy. Like, it's going to be crazy to actually grow an account. So if you have this, value your RR. If you have this, also you have to value your RR. But you see, this has a problem because of this small win rate. That small win rate is really crazy because you don't know when you are going to hit those high R trades, and you just keep taking losses, and you just count on one trade that will take you at a big win, and it's kind of really risky, really risky. So what I do is, if I know that SMC trader, the buy setup they have is this, right? They have an order block here, they want to take a trade based on. So for me, this order block has two. This order block here that I'm looking at, or to whatever zone I'm looking at, I don't usually use order block. I'm not going to tell everything I'm using in my course, but I don't usually use order block. But for me to use, let's say, this low to enter a trade, this low has to fill some sort of criteria for me. It has to do things that I learned from ICT or some other stuff. ICT, algo, whatever. I want this low to do all of the things that ICT does to make it to be a high probability, let's say high probability order block, 80% win rate order block. Okay. Then when price come and mitigate my zone, I want to see price mitigating my zone at a particular time of the day, which comes to time and price. Okay, I want this thing to happen in a particular time of day, and if it does happen, then I need my confirmation. I need my buy setup, and my buy setup, I wouldn't really enter from a breaker, like having those small RR trade, because if I enter from a breaker, my stop is going to be too huge. If I enter from a gap, my stop is going to be too huge. If I enter from another block, I might not even get triggered. Okay, so both of them, they have pros and they have cons. So what I do is I somehow combine it. Okay, like it does scenarios where I enter from or a block. It does scenarios when I enter from averages, scenarios where I can enter from breakout block. It depends on scenarios, and I taught all of these things in my course. So this is what I do. I combine both of them to get the high probability trade setup and to really help me. So the thing is, I can hit 100R and I can have a high win rate compared to this 25% or whatever. For you guys who are asking me for my win rate, if I'm really trading like without a streak of losses or a string of winning trade, is 50 to 60. These are two. So if I get, let's say, 4 trade setup, I can have 2 wins, 2 losses, or 2 wins, 1 BE, 1 loss. Or if I have, let's say, 10 trades, I can maybe have, I don't know, 4 or 5 wins, some break evens, and some losses. If I now start going through losses, it goes from 35, it goes from 35 to what? 35 to 50 or 45. Let's say 35 to 50. So this is where I go through losses. If I go through losses, my win rate is between those two. But if I'm, like kind of back, like I don't really hit those losses, back to back losses, my win rate is this. Because your win rate based on the time you traded plus the trade you took. So you might be in a week where you took a lot of losses, your win rate can be maybe this. In a week you didn't take much losses, your win rate can be this. So these are the two that I really have like win rate. And win rate, for you to know win rate, you don't just get an account today and you trade for a week, because for a week you can get lucky, have five winning trade on a row and maybe 1 loss, and you have a 90% win rate or 85 something, and you start maybe capping like you have a 90 win rate or 50, I don't know, something like that. But you have to trade your account for months to really know your win rate. So try to trade an account, okay? Don't really blow or do anything. Try to trade an account for at least 3 months. Then based on the 3 months you traded your account, you'll now see on your dashboard if whatever your win rate is. Then based on maybe the win rate from so if I have to put everything into perspective, let's say from to 40 to 60, yeah. So this where my win rate lie to. I don't really go to 80 or something. I never have the 80% win rate. So 40 to 60, and from 40 to 50 or 60, if I wouldn't really go for 3 hour. If I go for 5 hour, that's even enough to be profitable. 5 hour, this win rate, that's all you need, and plus discipline, because if you don't have discipline, you can still lose money. So you have this, and you put in everything together, then you start making money. And you still, as I told you guys, 100R, 50R, all those RR, I hit them like you can see on my YouTube. Okay, you can check my other YouTube videos. I even have one YouTube video that I still want to make. It's really easy for me to hit 100R in a week. Actually, pretty much every single week I have at least one trade that ran for maybe 50R or something. So by having this win rate, then if you can get this, or if you can get this, is fine. But if you can go closer to this kind of R, that's it. And for you to achieve all of this, you have to combine ICT, SMC. Only ICT, actually your win rate is going to be low. It's not really easy for you to get those high RR trade. Okay. Then if you only use SMC, this is also the thing. Your win rate, if you only use ICT, the RR is not going to be much for you. If you only use this, your win rate is not going to be much for you. So if you can use SMC setup combined with some ICT confidence, but not only confidence, you always want to see those things before taking your trade. Then you can now increase your win rate from this to something closer to maybe 40%. Then plus your this, then easy, you can now end up making money. So these are the difference between ICT and SMC. Market structure, all of these, from market structure to win rate, you now know all of them. If you want to go for SMC, that's it. If you want to go to ICT, it's still okay. But if you want to go for both, you have, for going for both, what you can do is you take a course that already have both, like the Scalping master I have. You can pay for the course if you want, link in the bio. But if you want, you now have to learn ICT plus SMC. Then you now combine whatever you think is useful. Whatever you think SMC is useful, you take. Whatever you think ICT is useful, you take, and you put all of them together. And for you to learn SMC, you can check it on YouTube. If you want to learn ICT, for ICT, I don't recommend you to go for any YouTube video. I want you to go to the ICT channel himself. You go to ICT and you can try to learn from him. So you learn both, and you now combine, get your strategy. Or if you want, you can just pay for the Scalping mastery and you get the combination of these two. Alright, so this is an example of a cell setup on EU using ICT, pure ICT concept. So if you look at this, I know that you are bearish. Okay, if you are bearish, you are looking for sells. But if you want to sell, you want to see, you want to look for a gap. Like you see this gap. You have this high here, dropped, broke the low. You can see that this high drop broke the low and left behind this gap. By letting this gap, you want to see price pull back to fill the gap and give us a sell setup, right? So now price pull back, tap the gap, it drop down. If you got a sell setup here, that's fine, you would have made money. Price drop. By dropping here, price pull back to this gap. You see this gap here. Price pull back to this gap, drop down. By pulling back to this gap and drop it down, it bought. From buying here, if you zoom in well, you'll see that there is no gap for price to pull back and tap. All of these are filled. These are filled. All of these zones are filled. The only one that is still unfilled is only this zone here. So if price came here and gave a sell setup, maybe they would have taken the sell setup. But price went through it without confirmation. By going through, it doesn't make sense to sell from this high because all of these, everything is actually filled. There is no reason for price to hold this high. So then price buys, take out this high. So this would have been our sell side, our buy side liquidity. This is our buy side liquidity, and this would have been the gap that we are waiting for price to come and fill it. So by price coming here and fill this gap, by filling this gap, now we can look for sell setup. And the sell setup, what can we have? There's really no clean market structure shape here for a channel character. That would have been cool if price broke this low. Let's see, it would have been really way better if price broke this low. So from filling this gap, I want to see price drop, break this low. It didn't happen. This would happen because before I get this sell setup. But as I'm just using to illustrate the ICT concept, so let's say that this zone price drop and broke this low. By breaking this, it has to leave behind some sort of gap for us to get the sell setup. And the gap that price left, it is exactly this zone from this candle with this candle here. So this was the gap, the gap here. This was the gap that price left, and by leaving this, we can have our entry exactly at the opening of the gap, and our stop loss were exactly at this high here. Because the price might still go and mitigate the order block, there's no problem. So we have to get something like this. And what do we target? The safest target we can target is the previous low, which would have been like 1 hour, but trading 1 hour is not really worth it. So we can just target 3 hour. They usually trade 3 hour, so let's target 3 hour. So we can target, yeah, exactly 3 hour here. And if we see the price hit TP, yes, price hit TP. And from price doing this, they can still get re-entries, and every single re-entry they get is from gap. You see this gap here, price pullback, tap, that would have been a re-entry for them. You see this gap here, price pullback, fill the gap. Okay, by filling this gap, this would have been a sell again. Here you see that price already filled this gap. It left, but not really that much. So the only gap which is really kind of visible, it was this one. So from here you can see that you have three sell setup. You have a sell from this gap, sell down, pullback, re-entry, sell, and every time price is still bearish, it will just leave all those gaps and it will come fill and fill and fill. And when price end up filling all the gap, and if there is no gap left, what price will do is it will rally, take out all of these, then come to maybe some extreme zone where price left maybe some gap, then give a sell setup. And that's exactly what price did here. Price gave some sell, then when price fill everything, it rally away, fill the extreme gap left, then give a sell setup. So this is how you can get this sell setup, this sell based on ICT concept. Then the same trade here, I'm going to get based on SMC. Based on SMC, what do they have? They have this order block, right? They have an order block, and they have a break structure to the downside. This would have been the break structure they're looking for. Then the price left behind some sort of liquidity. All of this for them is liquidity. So they want to see price rally, take out the liquidity and tap the order block and give them a sell setup. And they use this gap. They don't really use the gap to enter trade, but they use the gap as confluence to their trade. Then when price does this, what they do is they go to that time frame, they look for confirmation. And on this, there's really no pullback after the confirmation. If you use ICT, you know this would have been the gap you are looking to sell based on, and price came fill exactly and drop down. But for SMC traders, for those who are looking for order block to sell from, most of the time they have some extreme zone like this one. They wait for price to come, tap the OB and give them a sell setup. And most of the time price don't fill them in. If you have a sell here, if you try to see on ICT, we had only a 3 hour. Meanwhile, this would have been a 10 hour trade, and this is not even final TP. Final TP on ICT was somewhere down here, almost 18 hour. So only this one trade is, let's say here, 10 hour. If price came and fill us in, that would have been 10 hour trade. Let's say on this we entered without confirmation. I just want to get the trade setup based on SMC. Okay, so we have this sell here, then we have let me remove the replay mode, and let's see the final TP. Yeah, so this would have been the final TP, which was 6 hour. Yeah, so the same trade based on ICT, we had a 3 hour trade, and the same trade based on SMC, we had a 6 hour trade, which is twice ICT setup. Actually, it's twice ICT setup. But for me, then what I did is I combine ICT with SMC. I use all of these concepts here plus SMC, then with some algo stuff. Algo is just like SMC. Then I get my trade setup. And if I come back, I did not get this sell here. This sell that has happened, or the one I just broke it down, I didn't get this sell. But these are the trade I got. This buy here ran for 7 hours, this buy ran for 3 hours, or whatever. But if I come back here, I try to get some trade setup. I show yeah, if I come to this, you see this one here, price didn't tap the order block, but I got the sell setup here from this breaker block. You see this breaker block, this breaker block, this was ICT, this ICT stuff, but I still use it to get my trade setup. Then if I continue, let's say if I come to this low here, this was another block, this low was another block. So if I scroll here, you see this low was another block on the lower time frame. If I zoom in, you see that this low is another block. If I zoom in this, yeah, you see this low is another block. So as this low is another block for me, actually another block, I see SMC traders, they use another block to enter trades, so I enter based on. But I don't just get another block to enter. I use a lot of things. I want to make sure that this low is valid. I want to make sure that this low is valid, and it has to fill some criteria, which is some ICT stuff and some algo stuff. Then I want to take my trade based on time and price. For me to enter this trade, I want to be maybe in the kill zone. I want to be maybe in some time window to take the trade. I don't just take the time because I see a trade setup. Like if you look at this one, you can still trade it, but the fact that I did not trade is because it's not in my time window to enter trade. And if I go back, you'll see that every time price comes to this kind of time here, this would have been a spread time, but I'm talking about somewhere below here. When it approaches this kind of time, I don't usually trade, and I have a specific time to enter trade. So this is pretty much the breakdown of SMC, which is this, ICT, which is this, then this is Astute FX, SMC plus ICT, and some personal stuff. So thank you for watching the video. If you guys like this type of content, make sure you subscribe to my YouTube channel and also follow me on Instagram. That will be much appreciated. Thank you.